Hi, this is Sue from Bitcoin Country. Today's date is April 11th, 2021, and today we are going to discuss how does Bitcoin fit into your financial portfolio and some of the factors that can influence the rate of investment and the issues that can affect the price movement of Bitcoin. I just first want to remind everyone I'm not a financial advisor. I've got into this for entertainment and educational purposes. My goal here is to provide people with some financial education to help them hedge their risk against uncertain financial times that we're living through. Okay, I'm going to share my screen here. I've got several articles to show you. The first thing I wanted to show you is, let me move this. This chart just shows the past volatility of Bitcoin. And as you can see, in the earlier days, and Bitcoin was introduced in 2009. So this chart starts in 2011. So it shows for the last 10 years. But as you can see, Bitcoin has been extremely volatile. And even though you consider it fairly volatile now, the volatility rate is going down. Here you see on the chart, it says the standard deviation of daily returns. So back in 2011, some of the days were as volatile as 15%, which is pretty high, even in 2013 and 2014. And in 2020, the biggest day was 10%, which is still pretty high, but if you notice, all of this is a lot lower. So is Bitcoin at the top, or does it have more room to run? Well, I guess only time will tell. Just a reminder, it could moon or it could go to zero, just like a lot of your other investments. You've got investments in stocks and bonds, they all have risk. And that's the key to understanding how to spread out your risk among your financial investments. This is another article. This is from CoinDesk, showing how the volatility has dropped. So this is a big deal to institutional investors. Bitcoin's price action has been less exciting as the #1 currency cryptocurrency by market capitalization has traded in a narrow range between $55,000 and $60,000 over the past week. That's actually good for us. I don't like it when things get too volatile, and it's made such good returns over the last couple of years that there's no point in being greedy. It needs to settle down. Here's a chart showing realized volatility, which just means what's happened in the past. So you can see the volatility was climbing, and since about the beginning of March, the volatility in Bitcoin has continually been going down. So that's another good sign. Okay, so what has been slowing down institutional investment into Bitcoin and other cryptocurrencies? Well, the #1 reason is risk and volatility. So I showed you those two charts regarding the volatility. And why is the volatility in a downtrend? Well, the reason is the more liquidity there is in the system, the less effect large orders have on the price of Bitcoin. So as the market cap grows bigger, which it's grown, the Bitcoin market cap has grown quite a bit in the last 6 months. So the larger orders have less of an impact on the price shift in the market. Okay, the next thing we're going to talk about is implied volatility, which is volatility moving forward, and it's an estimation of the volatility there will be in the market. Historically, the implied volatility spread has proven a reliable indicator of upcoming shifts in market leadership. In September, the Ethereum Bitcoin implied volatility spread fell to multi-month lows signaling a change in traders' focus to Bitcoin from ETH and decentralized finance. Then during the final months of 3 months of 2020, Bitcoin surged, outperforming ETH and all other major cryptocurrencies. Here's another chart showing the volatility has calmed down quite a bit in the last couple of months. Okay, so how does Bitcoin fit into a retirement portfolio? Well, cryptocurrency has a low correlation with stocks. That's a good thing. And this article is from Forbes on March 2nd of this year. Their opinion is Bitcoin is a cryptocurrency asset class deserving of a place in every endowment and retirement portfolio, or rather they pose the question. So the correlation between two series of historical returns measures the degree to which two assets track one another. A correlation of 1.0 means they march in lockstep, and a 0.0 reading means they aren't connected at all. So the whole point of diversification is to put together a mix of different assets that have low or negative correlations with one another. This is why you hear the salesmen for various alternative assets like hedge funds boasting about low correlations to the stock market. Sometimes overlooked in this correlation game is a crucial assumption that the second asset has a good expected return. If all you want is low correlation, after all, you could put half your money into the S&P 500 and the other half in lottery tickets. So that's just showing you it doesn't mean just because you have it in two different asset classes or two different investments that one is going to yield more than the other. However, and the reason I did not talk about real estate, REITs, real estate investment trusts. They talk about the case for real estate investment trust shares into your asset mix. With everything that's gone on since last March, the commercial real estate is in a humongous tailspin, and so I would stay away from those. Those probably aren't going to do very well for a very long time. Overall, that is. So stocks, bonds, real estate, commodities, Bitcoin, asset classes. They could also add gold, silver, precious metal. They say real estate, but they could be referring to commercial, residential, multi-housing residential. We could also, in real estate, say we were referring to timber producing land. Others would include rare and precious art in their financial portfolio. So JP Morgan, who for several years badmouthed Bitcoin, now the date of this article is April 2nd, they reveal a big Bitcoin price prediction as Bitcoin and the crypto market surges towards a total of $2 trillion market cap. And the market cap just means the amount of money that's been put into this sector, meaning cryptocurrencies. If you aren't aware, Bitcoin is around $60,000 right now. Okay, I highlighted this. JP Morgan found that a 6-month measure of Bitcoin volatility appeared to be stabilizing around the 73% mark, suggesting tentative signs of Bitcoin volatility normalization that could help to reinvigorate reinvigorate interest from institutional investors. So this is what institutional investors are looking for. The past volatility trends plus the implied volatility going forward. And when they can see that the implied volatility going forward is also going to be a lot lower, then they're more apt to get into the market. And as we have seen, and I've showed you many of these articles in my past crypto news updates, there are a tremendous number of companies that are now getting involved in this. So here's a list of some of the key players. And this is from Business Insider. Morgan Stanley, Chinese selfie app. March 12th, MicroStrategy buys another 15 million. March 9, JP Morgan launches crypto exposure product with an SEC filing. NYDIG raises 200 million from big names. Morgan Stanley and Soros Management were among the big names to get behind crypto technology firm NYDIG in a $20 million raise. March 1st, Goldman Sachs. February 23rd, Jack Dorsey's Square buys 170 million more Bitcoin. First North America Bitcoin ETF launches. Bank of New York Mellon plans to issue, hold, and transfer clients' Bitcoin. MasterCard will allow merchants to accept selected cryptocurrencies. Tesla says it invested $1.5 billion in Bitcoin. BlackRock, this is huge. BlackRock authorizes funds to invest in Bitcoin futures. BlackRock is the biggest holder of biggest asset manager. Here they say they hold $8 trillion of assets under management. Grayscale is another one. They have a Bitcoin trust, but if you look up Grayscale, they are now or have created trusts for several different cryptocurrencies. Ethereum, Bitcoin Cash. I think they have one for Zilliqa. Polkadot, Chainlink, there's quite a few. There's more than I can mention right now. And they have other trusts that they are in the process of discovery and deciding whether they are going to open trusts in these other cryptocurrencies. October, PayPal announces it will let customers buy and sell Bitcoin. So as you can see, there's a lot of institutional money going into the cryptocurrencies. And as I have pointed out in past news updates, a lot of the institutional investors are offering it to their wealthiest of clients, which is why I got into the cryptocurrency education world here. My goal is to help people like me that don't have hundreds of thousands or millions of dollars to invest in this new technology and make some return, because now's the time when we can make some return, not after and I mean by we can make a better return now while cryptocurrency is going through the adoption phase. And the adoption phase just means that it's new technology that people are dipping their toes into, and we are seeing so much new technology rolling out. Don't just think of cryptocurrencies as being money, because they are not. Cryptocurrencies have to have a use case. Bitcoin is said to be digital gold because it stores value, labor energy. Litecoin is similar. Ethereum is more for hosting other platforms and other technologies building on top of the Ethereum platform. Tokens that will do different things, like video streaming, gaming, smart contracts. Eventually we'll have We'll be able to do loans between individuals. Say, for example, my kids wanted to buy a house. My son wanted to buy a house. If I had enough Bitcoin in my portfolio, I could loan him out. I could loan the money. I could loan the Bitcoin to him to buy a house. Now there's an amount that you have to hold back. So say I wanted to loan my kid half a Bitcoin. I would need probably a whole Bitcoin in my portfolio. In other words, holding back some equity and loaning out the rest. And that's truly a way we can get around banking. It's going to lower our fees to do these things. And the biggest thing with cryptocurrencies, at least as far as Bitcoin goes, is faster transaction speeds, global trade, fast payments, lower fees. It's all about improving efficiency in the way we do business. So there's a, I guess I kind of went off on a tangent there, but I just think it's very important that we learn new technology, because the new technology is coming whether we're ready for it or not. And so if you know me personally, reach out to me. If you don't know me personally, I have a link down below for my calendar that you can schedule an appointment. I can help lead you through some cryptocurrency education, the how-tos, and I would also point you to Open-Minded Bitcoin's Patreon. I'm a contributor to that Patreon. We're doing a lot of how-to videos, and it's a good way to very inexpensively get into some education, some education to learn how to do this all yourself. Like I said, I got into this because I don't have hundreds of thousands or millions of dollars to invest. And so the only way I'm able to get into this is if I learn how to do it myself, which is what I've been doing the last couple of 2-3 years, is working on educating myself about cryptocurrencies and the role they're going to play in the world and in our financial portfolios. So take care, everyone. I'll see you again next time. This is Sue from Bitcoin Country, and I want to remind you that family is everything. Take care and have a good day. Bye now.